Jupiter Wagons, smart moves near today's session because 5,376, that's the order worth around 215 odd crores. The stock trading at the day's highest levels, 12% up move coming in on Jupiter Wagons. Joining us on the show to discuss more, we have Vivek Lohia, MD at Jupiter Wagons. Vivek, firstly, congratulations on the order win. I mean, you know, orders do come in, but there are supply side constraints, right? And that is what...
I can't get the anchor audio.
Can you hear me, Vivek? Okay, stay with us.
I was wondering if you can hear my audio, but
probably
it won't be the same. It'll be the same thing. But, you know, it's interesting that people haven't quite warmed up, Hiral, to the railway theme now. It enjoyed a great run. And since then, I think the last 12 months maybe.
Yeah, right? I think the capex announcements or the government announcements in terms of allocation to railway has been a downer, right? I think that is one of the major reasons. And the second aspect is the supplies that they were supposed to get from the government in terms of rakes. That has seen a slowdown.
The orders, you mean?
No. So the government, so they take some inputs from the government in terms of rakes to deliver on their orders. So what comes in from the government, that is not coming in on time, and that has been one of the reasons why even Jupiter Wagons did suffer in the first quarter. I think I remember speaking to Vivek about it as well. I think we have Vivek back with us. Vivek, firstly, hope you can hear me, and congratulations on the order win. If you could help us understand the timelines in terms of these order deliveries, and overall, how much is your dependency on the government from a supply chain perspective as well?
Yeah, thank you for getting me to the channel. This order we have to execute over the next 2 years. And on the wheel side of the business, again, you know, the first quarter, as you rightly said, that the supply of wheel sets was a challenge for us. So we are now trying to ensure that, you know, we put in a lot of investments in the wheel facility. So we are ramping up the production there itself. Next year, we are taking the production up to 20,000 wheel sets. And by the end of next year, we'll have our integrated facility in Bhubaneswar completely up and running in Orissa. So that will help us produce close to about 1 lakh wheel sets annually. And that will not only be for the Indian market, but it will be largely exported also to the European market. So we are very, very bullish on that product. And, you know, for us right now, supply chain management is the crucial factor.
Okay. So, Vivek, where does it stand right now? Apologies. What's the delay that you're seeing?
So, no, so now, you know, supplies from the government, also from the railways on the wheels has improved. You know, we are now looking forward to the new round of wagon orders from the railways, which we are expecting before end of this year. I think on the private side, our order books are very healthy. We recently got an order of close to about 300 crores from GATX. We expect further strong order book on the private side, and execution there is also very strong. So going forward, you know, now since the wheel set discussions have sorted out, we expect our revenue numbers to be strong going forward. And as and when the orders from Indian Railway comes in, you know, we are all set to ramp up our production. Because overall supply chains now, we have put in a lot of investments over the last 2 years. On the wheel project, we are investing close to about 2,500 crores. So, you know, all the bottlenecks which we have, now we are try to ensure that those will not remain in future.
Vivek, well, is it that small news these days are also getting rewarded because they are few and far in between? But Neeraj here, thanks for speaking to us. And I wonder, what's your view on the trajectory over the course of the next 6 to 9 months? Because I know that companies like yours decided to do backward-forward integration as well in order to increase the size of the pool, right? Because the basic spend, at least for the current financial year, came off. Now, what happens? I remember, the reason I asked this to you is because end FY23, beginning FY24, the street believed that a compounded annual growth rate of an XX%, whatever the assumption is, might last for the next 5-7 years. There is a bit of a root shock to that. What happens here on?
So no, definitely, as you rightly said, that the expectations were much bigger, but I believe that the story is very much intact, because if you still see, if you look at the entire logistics sector, the sector is growing still at a very healthy pace at about 5 to 7%. And railway share of that sector is still very small. It's about close to only 20%. And railway is making a very concerted effort in terms of the infrastructure build up. So there's not been any let up from the railway in terms of infrastructure build up. And now, in the next 6 months to 1 year, you will see the, Honorable PM's Gati Shakti scheme, which he has introduced, that will start playing out, because a lot of new private siding connectivity has taken place. A lot of private terminals are now up and coming. The container side of the business has really picked up. We have now developed a new wagon for carrying auto cars. We have a very strong, healthy order book there. And we expect, the in terms of the demand side there itself is also very strong. So I expect that given that railway's share is still very small and the overall logistics space is still growing at a healthy rate. So this hiccup is a very short-term hiccup. I expect in the next 2-3 years, I think the business outlook is going to be quite strong. And you need to get your infrastructure ready. So our idea is that when the next round of big order books happen, at that time we are fully prepared, so we can take best advantage of that.
Okay, well, and you're bringing in good news, Vivek, because as we speak, the HSBC India manufacturing PMI and the PMI data is out. Services PMI has gone up, manufacturing PMI is higher, and the overall PMI is the record high level as well. So maybe activity in India has certainly picked up. Services PMI is record high, manufacturing PMI at 59.8 versus 59.1. This is, remember viewers, a bit of an advance estimate of sorts, not quite cast in stone, but Pranjal and team do a good job out there, and I reckon that this should be construed positively. Vivek Lohia, thank you so much. We're out of time on the show completely, but congratulations on this order and all the best for the quarters ahead.
Thank you very much.